All right, good afternoon, everybody. How are we doing today? Thank you, Craig. I appreciate that. All good to go here. Hey, Mike. All right, well, I hope everybody's had a good trading day today. We had some good movement in the market Friday and today as well. Hope everybody's taking some good advantage of that here. We're going to get kicked off and get rolling here. So welcome, everybody, to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and today's webinar is brought to you by and hosted by Nadex. So we appreciate them having us here today. And you know, we do these webinars for Nadex. I got to give Nadex a lot of props. They do a ton for their members. You know, they offer a ton of free information, free education, free tools. Definitely take advantage of that. That's what we're here for, is just to provide you some, free information, education about who and what is Nadex, what are the products that they offer, kind of hold your hand and walk you through how to understand the products that they offer, different ways that you can trade them, take advantage of them, and utilize them in your day-to-day trading. So today, we're going to talk a little bit about, I get the question quite a bit, hey, Nadex offers two different products, binary options and spreads. And which one should I trade? Should I trade binaries or should I trade spreads? And something you've heard me say in the past is, I'll talk to people and they're like, well, I trade Nadex binaries. Or other people are like, well, I trade Nadex spreads. And, I personally like to say, well, I trade Nadex. I'm not going to limit myself to just binaries or just spreads. Depending on the market condition, there might be a time where a binary is better. Or there might be a time where a spread is better. And so I don't limit myself to just one. I trade both, and I, make the decision of which one I should trade, based on what is the market doing, what are the market conditions, what strategy am I trading that day. And we're not going to get really in depth today into different strategies and systems, but just a little more to set a foundation here for you about, what are some of the basic foundations, some of the basic things you should be looking for to help you determine which route you might want to go, binaries or spreads. We're going to talk a little bit about, the pros and cons of each in different type of market conditions. Okay, so let's move forward here. Let's get our disclosures knocked out. Trading futures options or any financial instrument involves risk. It may not be suitable for every investor. Any examples you see here, like for example, if you see me pull up the Nadex demo platform and I enter an order, that's in no way trading advice or a recommendation at all, or a solicitation to buy or sell. That's simply me just helping you visualize the strategy that I'm showing you, or visualize how to actually use the Nadex platform and ticket submission. Okay, in no way trading advice. Past performance is not indicative of future results, and any trading decision is your sole responsibility. So speaking of Nadex, let's just pull up the Nadex website real quick here. And for any of you that are brand new to Nadex, you should be familiar with this site, but just a quick walk through here. Once you're on the site, you can go here to either one of these two tabs right here, binary options or spreads. These are the two products that Nadex offers. You can go through these tabs, get some great information about options, binary options, and spread options to, help you understand a little more what they are. But right over here and up top here, by the way, you've got market news, a great place to get an idea of some things that are going on with the markets and things to look out for, maybe give you some opportunities, ideas here of ways that you can take advantage of those markets and what they're doing. Right here under the Learning Center, you got some great information here. You got videos and trade examples and ebooks. But right here, webinars. If you click here, this will show you all of the upcoming webinars that are on the schedule. That way you can check out the date and time, check out the subject matter, and get registered for those webinars. Once you register, you'll also get reminder emails of when they're coming up. Right here is Webinar Archive. This is where all the recorded webinars go. Yes, today's webinar is being recorded, and this is where you can go and find, any recordings of past webinars you might have missed or any particular subjects you want to check out. If you go right here to filter by presenter, you can click down and find us right here, Apex Investing Institute, and you can go back and check out, the different recordings of webinars. We cover everything from, the very basics here of, do you know the basics of a Nadex spread? That's kind of where we kind of hold you by the hand and just walk you through what is a spread and how do they work. And then, we've got other webinars about you really understand risk and reward and choosing the right spread and collecting premium and different strategies. So, kind of start to finish is all in here. So go through and check these out here, especially if you're new to us here today. We won't be, covering the basics today of binaries and spreads. This webinar kind of presumes you already know the basics, but if you don't and any of this is a little over your head, not a problem at all. Just try to follow through with us, and you can go back and get caught up here on a ton of different subjects from start to finish, okay? Right here under trading platforms, you can go directly to the online Nadex platform. They have a great mobile app for your Android smartphone. Right here, demo trading platform. If you don't have a demo account, sign up and get one right now. Even while we're on this webinar, Nadex will give you a free $25,000 demo account. Okay, that way you can get familiar with Nadex, how the platform works, entering and exiting orders, get familiar with, the different instruments they offer. Just fill out some quick info here and hit open my practice account. In a few moments, you'll get an email from Nadex with a temporary password, and that will allow you to log into the demo platform. Once you do that, once you log in, you go up here to My Account, and you can click Settings and then Password. And that will let you change the temporary password they give you to whatever you'd like it to be, okay? But make sure to take advantage of this. It's a great tool. Like I said, it lets you get familiar with the platform, familiar with the different products that Nadex offers, the different binaries and spreads, what instruments they offer them on, the different expirations, entering and exiting orders. Helps you, if you're testing a new strategy or system, do that in your demo account. Don't do that with live money. Don't test with live money, right? That's a very expensive education. You want to definitely utilize your demo account for that. And, just like today, we're talking about, binaries and spreads. Which one should I trade? Well, let's say that you're currently right now a binary trader. You don't really understand spreads. You don't really trade spreads a lot. You always trade binaries. Well, start to learn spreads as well. And, let's say you're taking, binary trades in your live account because that's what you know. Well, anytime you enter a trade, go ahead and enter a spread trade on your demo account. See how that works out, or vice versa. If you're a spreads trader, try some binaries in your demo account. See which one works out better for you. Then go back and examine those trades and see which one worked better. Why did it work better in that particular trade setup or that particular market condition? And that will help you, if you track that and keep a trade journal of that, it'll help you to start learning that and seeing for yourself, okay, these particular type of setups, these particular type of market conditions seem to work better with a spread or seem to work better with a binary, okay? So utilize your demo account for new things and for testing both binaries and spreads and tracking that, okay? So once again, Nadex offers you a ton of great tools, free education, free information and webinars, the demo platform. Definitely take advantage of that. Once again, my name is John Skelton with Apex Investing. Apex and Nadex, two complete different separate companies, right? Nadex is an exchange. Apex, we're an online education company. We're a group of traders helping traders. We've got over 25,000 members now. We're education based. We've got live trade rooms and indicators and software and systems and strategies, but we're traders just like you. And a lot of our strategies really focus on risk management and probability. That's why we love the capture risk products of Nadex. And we're an education partner with Nadex. We do these webinars for them, but we're traders just like you. Okay, we trade Nadex binaries and spreads, every day ourselves and in our trade rooms. And we're just here again to give you some free education, just from one trader to the other, help you understand some different ways to take advantage of the Nadex products. Okay, I've been with Apex now as head of operations for about 4 years. I've got a background in the banking industry and as a licensed stockbroker with Smith Barney. So I got about 15 years in finance and trading, and I'm an educator and a trader just like you. Okay, so enough about me, enough about that. Let's jump right in. Today's subject: binaries or spreads. What do I trade? Okay, and like I said, today's webinar is just more a basic foundation to help you understand the differences of why you may want to trade one over the other, okay, depending on what you're looking at in the market, okay? So we're going to talk a little bit about risk and reward ratios, expected movements of the market. That's very big. Okay, you know, what do we expect this to be, a big move or a small move? You know, what is the, you know, where's the support and resistance? What is the range of the market today? Because, you know, knowing some of that is going to help you determine and choose a binary over a spread, perhaps, right? So we want to compare some of the benefits and the trade-offs of each. And like I said, we're not going to be covering the very basics today. I've kind of showed you already, or I've showed you already where you can go back and get some of those recordings and webinars. If you need to cover the basics, this webinar assumes you've got a handle on the basics, and now we're just doing a comparison. So let's talk about binaries a little bit, okay? So we hop on over here to the Nadex website, and let's just pull up, for example, some stock index binaries. Let's pull up the NASDAQ derivative here, okay? So we know here that, you know, for example, the 3 o'clock expiration here, we've got quite a few different strike prices, okay? And each one of these different strike prices is a binary option, okay? All a binary option is, as we know, we're not getting in depth here, is just a statement. If I was to click on any one of these, it opens up a ticket, and the statement says the US Tech 100 will be greater than 67.59 by 3 p.m. That's just a statement, and all a binary option is a statement. Yes or no. That statement will be true or false. It will happen or it won't. It's binary, right? Yes, no, true, false, 0, 1, happens or doesn't, okay? So with the binary option, we have different strike prices to choose from, different contracts to choose from, okay? And it's just a simple matter of, do we think that this statement will be true? And if we think that particular statement and that at that particular strike price will be true, then we'd want to buy a binary, right? That binary. If we think it will not be true, then we sell it, okay? And the binary itself is based on, you know, it can be literally down to a tenth of a tick, meaning if I buy this binary, I say, yes, the US Tech will be greater than 67.23, okay? Well, if the market expires at 67.24, just one tick above it, then the statement was true, right? And at expiration, a binary is either worth 0 or 100, okay? But if the binary expires at 67.22, just one tick below it, then the statement is false, right? What if the market expires literally at 67.23.000? Well, then the statement is still false, right? Because the statement said it will expire greater than, okay? So there's a little bit of pro and con there with the binary, right? Because what we're doing with the binary is we're choosing a, you know, exact strike, and it has to literally be above that. One tick above it can be profit, right? If I bought this binary right here for $27, well, if it expired one tick above, then I bought it for $27, it expire worth $100. That's a pretty nice ratio, right? But if I bought it and expired one tick below, then it would be worth 0, right? Let's look at some other examples here. Let's pull up some forex binaries, for example. Let's check out euro dollar. Let's look at, say, 3 p.m., right? You know, I can buy binaries anywhere from $7 up to $86, right? I can sell them from 25 cents to $84. Okay, so for example, let's say I got this one right here, which is what we call an in the money binary. It's priced a little bit higher, okay, because the statement's already true. So if I was to buy this binary right here for $72, well, I'm risking $72, and I've got a profit potential of $28. Okay, so again, if this binary expires at 2407, then it would be a profitable trade, right? If it expires at 2405, then I would be a max loss of $72, right? You know, and again, we've got binaries from $7 up to $86. You know, I can go and buy one, kind of right here in the middle, about 50, about 53 bucks, right? So I'm risking 53 to make about 46, a little closer to a 1-to-1 reward ratio. But right here, if the market just has to move up just a little bit, okay, where's the market at right now? The market's at 24.15. So it's already just right at or just right above the strike price of 24.14. So I only need just for the market to stay right where it is, right? Even if it just kind of looked up, went up a tick or two, right? As long as it stays a tick or two above this, then I have a pretty good, return percentage here, correct? Everybody see that? Okay, what if we look at one strike down? What does this strike say? That it'll be greater than 24.18. Well, right now it's at 24.14. So I only need the market to move up just a handful of points and stay there and be there at expiration for this to expire profitably. I don't necessarily need some huge major move of the market, right? I don't need 50, 80, 100 point move of the market. I'm just looking for a very small move of the market for, for me to be able to buy this binary at 41 and to be able to make a profit of 58. That's a pretty nice return. Okay, does that make sense? Yes, Kevin, exactly. When you're looking at the binary strike prices here, this offer side right here is what you can buy them for. The bid side here is what you can sell them for. Okay, so the nice thing about binary options is I don't necessarily have to have a big, huge move. Okay, I could be looking for just a very small move of the market can get me a potential very nice return, right? But at the same time, if the market goes against me by just 1 point, 1 point against my strike price, then at expiration, I'd be looking at a full loss. Now, granted, I can exit the trade early to not take a full loss, right? But we're talking about at expiration here. All right, so when we think about some of the benefits and trade-offs of binaries, like I said, a small market move can make a big difference in the possibility of being profitable, right? Okay, and just a tick over that strike price can make a $20, $30, $40, $50, $60 binary be worth $100 at expiration. Okay, so if it's a slower market, just a couple of ticks can possibly create a large profit potential for me and a nice risk-reward ratio percentage. Okay, but a tick against me, even 1/10 of a tick, can mean all or nothing, right? You see the word heartbeat right there. Kind of your heartbeat at expiration, if you've been a binary trader and it's coming real close to your strike there, your heart rate kind of beats up a little bit right there at expiration, to see which way it's going to end up, right? When we've got a lot of room and the market has moved and we're feeling pretty good about that binary, it's like, hey, this is going great. But when it's right there, you're sometimes like, oh man, it's right there. Just a tick or 1/10 of a tick difference can mean all or nothing. Now, part-time traders, might really prefer binaries and like the 5-minute and 20-minute binaries. You don't have a lot of time to trade. You can get in multiple trades in a short period of time. Binaries, trading 5-minute and 20-minute binaries can be very fast-paced. Okay, some people love that. Some people hate that. It's not a right or wrong. It's a personal preference. And to trade binaries, you really do have to understand the difference of, see right here, I have OTM, ATM, and ITM. That means out of the money, at the money, and in the money binaries. If you're not familiar with what that is, there's videos in the section that I showed you earlier, because you have to make sure you pick the right binary, okay? And like I said, you can hold a binary until expiration, or you can scalp it and exit it early, okay? And you can exit early either way, meaning let's say that I bought this binary right here as an example, and I bought it for $47. And let's say the market turns around and goes against me, and all of a sudden this binary is priced at only 20 bucks. Well, I can get out early, okay, and take a smaller loss. I don't have to take the whole loss, right? Or let's say I buy it for $47 and the market's going in my favor. You know, kind of like you see here, you can see how these prices move, right? And go up in value as your binary becomes more and more in the money, closer to expiration. So let's say I bought it for 47 bucks and now all of a sudden it's worth 77 bucks. Well, I can get out early and take that $30 profit. I don't have to hold it all the way to 100 or have to hold it all the way to expiration, okay? So that's kind of the, you know, benefits and trade-offs of binaries, okay, is there's quite a few opportunities with binaries. In a slower moving market, you know, I don't always need a huge move, okay? I mean, once again, you know, here's a good example still, all right? This strike here saying it's got to be above 24.18. Well, it's already at 24.12. So I don't have a huge move there to get, you know, for the market to get over this strike there. So if I'm looking at, you know, shorter term moves or slower moving markets, I might be looking more for a binary, okay, where I'm not needing a whole lot of room or a whole lot of movement, you know, or like I said, might be looking at this one right here. What does this strike say? That it'll expire greater than 24.02. Well, it's already at 24.13. It's already way above 24.02, right? So as long as the market stays above 24.02 until 3 p.m., then this binary that I can buy for $76 will expire worth 100 bucks, right? So if it's a slow moving market, a range bound market, or the market's kind of up here and it just kind of died out, it's just kind of sitting there up here at 24.12, and I don't have any indication that it's going to go down past 24.02, I could utilize a binary in the money, for example, like this one or several others that we have here. This, you know, this one. Makes sense? Okay, I'm not expecting a big move. In fact, the market's not doing much at all. You know, some people think, oh, the market's just flat, I can't trade anything. Well, yeah, there's an example right there. Okay, if the market's flatlined up here at 24.13 and you don't see anything telling you it's going to jump all the way down to 24.02, you know, then a binary like that might be a great possibility for you, okay, or one of these other in the money binaries, okay, because you're not getting a lot of movement. So when you're not expecting or needing a lot of movement, these binary options could be a great opportunity for you, okay? But again, just one tick difference can mean the difference between full profit or full loss of what you know, have available to you there. So that's just an overview there of some binary benefits and trade-offs. Now let's talk about spreads real quick. And when you're a spread trader, you can't think like a binary trader. It's a complete different world because spreads are not all or nothing at expiration based on 1/10 of a tick, right? You don't have a strike price on a spread that the market has to be above or below for you to have all or nothing at expiration. It's not like that. A spread is $1 a tick, okay? And you've got capped risk and you've got max risk here. Okay, let's talk about that. You know, if we go and we open up a, you know, ticket on spreads, you know, it'll show us the same thing. We've got our max loss and we've got our max profit. Now, some people right away think, oh man, I don't like that. Look how much, look what that max loss number says right there for the spreads. Okay, well, this is completely different than binaries, okay? When this says max loss 135, all that means is that's the amount of money you have to put up out of your account to enter into the spread trade itself. Okay, that is not an all or nothing loss amount at expiration because spreads don't work that way. Spreads are not all or nothing at expiration. When you enter into a spread, whatever price you buy the spread for or sell the spread for, okay, let's just say, for example, I had bought this spread right here at 132.80 and the market goes up and it expires at, or I close it out at, you know, when I can close it out at, let's say, 133, okay? Well, the way a spread works, it's $1 a tick, okay, from where I bought to where I sell, or from where I sell to where I buy back. It's not all or nothing at expiration, strike price. It's more like mimicking the underlying market. Okay, if I think the market's going up and I want to buy the spread and I buy it at 132.80 and I get out at 133.80, well, then that's $1 a tick, so that's $100, right? If I buy it at 132.80 and it goes up to 133 and I get out, well, then that's $20. If I bought it at 132.80 and it goes down to 132.50, well, then I exit the trade and I'm down $30. It's $1 a pip. Okay, so it's a complete different world than binaries, right? Remember binaries, we talked about, you know, one tick above the strike can mean, you know, or what, compared to one tick below the strike can be the difference of all or nothing at expiration. Okay, spreads are not all or nothing. It's $1 a pip or $1 a tick. Okay, and you have to realize and not be overwhelmed by this max loss number here. That's just the amount you put up to trade, right? Just because I had to put up $135 to get in this trade, does that mean I'm going to just sit there and let the trade go against me 135 ticks? No, if I bought this for 132.80, my strategy or system probably has me getting out somewhere if the market is going against me 20, 25 ticks, right? Okay, so I had to put up 135 to get in the trade, but I'm going to exit when it's gone against me 20 or 25 ticks most likely. And so my loss would be 20 or 25 bucks. Okay, there's a difference. Don't be confused on max risk. Okay, there's a difference of max risk compared to planned risk or realistic planned risk, because you can exit early and follow your strategy. I mean, if that said $200 max risk, the market has to move against you 200 ticks. I mean, what's the probability of that? What's the probability of you letting that happen without exiting early? Okay. Now, granted, you might tie up a little more funds in your account to place a spread trade sometimes than you would a binary trade. Okay, but it doesn't mean you're risking more. In fact, most times your realistic risk on a spread is lower than what it would be on a binary. Okay, even though it looks bigger in that ticket. Okay, your managed risk is normally lower on a spread than it is on a binary. But the benefit of the spread is it's not all or nothing based on 1/10 of a tick. Okay, you're looking at $1 a tick. If a binary goes against you 1 tick, well, then you lose it all at expiration. If a spread goes against you 1 tick, you're down what? $1, right? So big difference there. Okay, but what happens if you get into a spread? Okay, let's say we bought this spread for 132.80 and the market goes up, 4 ticks. Well, how much would you make on your spread? If you bought it for 132.80 and it expires at 132.84, then you've only made $4 on your spread, because it's $1 a pip, right? Well, what do we look at over here on a binary? Okay, well, what we looked at on a binary was, for example, here, if we'd gotten this binary, the strike at 24.22, the market's at 24.17. So if this market went up 5 ticks, let's say, well, what will we make then? Well, I could get this binary for $41 and have a profit potential of 58. So do you see that difference there? On this particular binary, if the market went up 4 ticks, then I could make a nice return there, 58 bucks. But if I bought a spread and it only went up 4 ticks, I'd only make $4, right? But what happens if the market comes and expires at 24.21? It expires just one tick below this strike price. Well, then I lose $41 on the binary. If it goes against me one tick on a spread, I lose $1. Okay? So you see the difference there, guys? Some of the pros and cons. Okay? So in a slower market, when we're only expecting or looking for just a few ticks move, we might be looking at some binaries, perhaps, right? But what happens if, I was looking at this binary right here in a slow move, and I could buy it for about 70 bucks, and I can make about $31 on it, okay? Well, in a slow-moving market, I might really like that, right? Because I'm not expecting a big move. I wouldn't be expecting to make, a whole lot on a spread, but the binary would give me a pretty nice return there. But what if it's a trending market? What if the market's trending today, right? And I got this binary here, and I made 31 bucks on it. Okay, well, I might be happy with making 31 bucks, okay? But what if the market moves up 150 points? What if the market condition that day is a trending market? What if the strategy or system I'm trading is a trend trading strategy where I'm looking to get the bigger moves of the market, and the market went up 150 points? Well, for a larger move, the spread could possibly have more profit potential, right? Depending on the floor or ceiling of the spread. But for smaller moves, the binary could possibly have more profit potential, right? If I buy an at-the-money binary and the market moves up 5 ticks, my profit potential would be about 50 bucks. But if I bought a spread that went up 5 ticks, my profit on the spread is only 5 bucks. On the other hand, if the market moves down against you 5 ticks, well, then that's a $50 loss on the binary, but only a $5 potential loss on a spread. So you got to weigh your options and read the markets. You got to determine what's best for you, what's best for that particular market condition that day, and what strategy or system you're trading. Quick example here, and I'm not going to get into crazy detail about it, so don't be overwhelmed with the chart here, but one of our Apex proprietary systems that we trade is what we call the Apex pattern, okay? The APEX, right? A kind of stands for alert, P is pivot, as the market's coming down, it kind of pivots, and then E is entry, okay? And if you notice, it's a trend trading strategy of ours. And notice these square boxes here, okay? Those are our expected range boxes, but they also kind of denote time for us, okay? And I believe on this particular day here, these are all 20-minute periods, okay? These boxes here, so this would be like 12:20, 12:40, 1 o'clock, 1:20, 1:40, and so on. Well, so let's look at an example here. And, so if I'm looking at this day being, off to the left here, you can't see the whole chart, but, a trending day, and I'm using a trend trading strategy. Well, right here, when I had this pivot and then entry, I could have gotten a binary right there, right? Let's say I'd got a binary right there. Let's say right there, I got this binary, okay, that I could buy for $73.50. It's already in the money, right? The statement says it's got to be above 24.10. It's at 24.18. So it's already a good ways in the money. So I've got some protection there, right? So I can buy it for 73 and risk 73. And I've got a max profit of 26 bucks. Okay? Well, all right. So I got that E there, and I got this strike down here for about 70 something, 74 bucks. The market expires here, and I'm happy. I made 30 bucks, 26 bucks. All right? That would have still been a good trade. But look what the market did, because this is a trend trading strategy, right? I mean, where was the entry down here? Around 17,740. The market came all the way up here to about 860, 120 pips. 120 points. So if I'm seeing that it's a trending day and I'm trading a trending strategy, I might have preferred to either use an out of the money binary, right? But binaries at expiration are worth what? 0 or 100. Can a binary ever be worth more than 100? No. 100 is the max it can be worth. So my profit potential is capped there. Well, spreads are capped as well, but I might have some spreads that have 100, 150, or 200 points still available in them, right? Where I could have utilized on a spread, since this was a trending day and I'm using a trending strategy and I had an entry on my trending strategy, and I could have gotten 120 pips out of this move here. So, I could have made $120 on this particular move. As to where I only made $26 on the spread, right? Also, what if I had bought the binary right here and the market came down 20 points? Well, if I bought that binary and the market came down 20 points, how much would I lose on this binary? What would be my loss on the binary with a 20-point move against me? Who can tell me? Let's see if class is paying attention here. Yeah, if it went against me 20 points, then this would expire out of the money. I would lose $73.50. Okay? Now, if I'd gotten a spread right here to go long, and I was wrong, and the market came down against me 20 points, and I exited the spread, how much would I have lost on the spread? 20 points against me, $1 a point, so I'd be down $20, right? So do you see the difference there? Okay, I'm not telling you spreads are better than binaries. I'm not telling you binaries are better than spreads, okay? It's about the market condition, right? Because look at another example, all right? Or let's just say we had another example of, like I showed you earlier, where the market was just barely moving, or we didn't expect a whole lot of movement. Well, just a few ticks of move could have made a binary profitable, but you only made a few dollars on a spread. Okay, so there's benefits of each and drawdowns to each, and it's all based on the market condition and your expectation of the market. Okay. And we use a lot of things to read the markets. We use, expected ranges, strong levels. We look for breakouts of chop. Is the market choppy right now? Maybe we should be looking at, premium collection or binary trades. If we're having a big breakout of chop with some volume, maybe we're going to be looking at a big run, a nice trend, and we want to look at spreads. What are our deviation levels? What is the expected move of the market or expected highs of the day? All right, are there news events coming out today that could make the market move quite a bit? Okay, you have to learn to read chop, and you have to kind of think outside the box. You have to look at the overall picture. Don't just get stuck on, the price bars of your chart. Look at what's going on in the whole market. Is there news that day? Are we at a high level here? If the market's already made its big expected move for the day, do we want to keep going in that direction? Do we really think if it's already made a full 1 deviation move and it's at, highs, do we really think it's going to keep going? Do we want to hop into a spread trade expecting another long big trend? Okay, and you got to see the overall picture and look at volume. Learn to read the markets to know which instrument is best for trading, for that trading day or that time period. Are you trading a market that's open right now and moving a lot? Are you trading it during a slow time? So therefore, you shouldn't expect a big trend. Okay. So guys, like I said, this was just going to be kind of a basic foundation of, hey, here's some of the benefits and drawbacks of both binaries and spreads. here's some examples of different times you'd want to use each one, and here's some of the market conditions that you would want to look for. Okay, so keep that in mind. Like I said, start testing some of these. Like I said, if you're a binary trader, start putting some spread trades on in your demo account. See how they work out for you. When you're looking at some trending trades or expecting a bigger move of the market. If you're a spread trader, throw in some binaries. Start seeing when certain ones work out better for you, so you can start learning through your demo account when to start trading which type of instrument. Okay, and because again, I'm not telling you one's better than the other. Part of it's a personal preference of what are you more familiar with, what product do you understand, what's your risk tolerance, and what's your trading schedule, how much time do you have to trade, do you have longer amounts of time to trade to be in that trade while it's making its big trend. But again, a lot of it has to do with the market condition. Okay, so compare them and see what works for you. Guys, hop on over and visit us at apexinvesting.com. We'd love, more than happy to answer any questions you might have for us there as well. Got a ton of free education, step-by-step training courses on binaries and spreads, all kind of different, strategies and systems and news calendars. Some binary and spread scanners help you find the best ones. We offer free deviation levels on your chart, where you can look for, expected moves of the day. All kind of great information over there, so hop on over and check it out. And if you have any questions, just submit a help desk ticket. Otherwise, guys, we look forward to seeing you on the upcoming webinars. Be sure to hop on over to nadex.com and check out the calendar for the upcoming webinars. Yes, Mike, I will be there as well. Arnold says, I understand that at expiration, the spread value is dollar for dollar, but before expiration, the delta is only dollar for dollar closer to the middle of the spread. So how can you tell the delta of the spread before the expiration if you want to get out early? Arnold, yes, on the spreads, and for some of you that question might have been a little over your head. We do have some videos on that. If you go back and you go over right here, let's look here. Right here in our Learning Center, if you go back to the webinar archive and then filter by presenter, right here at Apex Investing Institute, we've got some webinars in here about choosing the right spread for your strategy, collecting premium and Nadex spreads. Several webinars there you can take a look at, guys, as far as choosing the right spread and what spreads are going to move, the quickest, dollar for dollar. But Arnold, basically, yes, the middle spread is going to move more dollar for dollar. As far as how to know that you want to get out, okay, well, a couple things there. First of all, if you're in a spread trade, okay, let's just move over here real quick to indices spreads. Let's take a look at small cap, 3 o'clock, okay. So if I'm in a spread, okay, and just as an example here, and I bought this spread right here for 1532.7, okay, Arnold, and the market's moving my direction, right? Like in that example I showed you here, for example, okay? Say I bought that spread right here, right, as the market's going up. Okay, well, first of all, as far as where I want to exit this spread, well, I first of all want to be doing what the chart's telling me to do, not what the delta's telling me to do, or the price, or the value of the spread necessarily, right? Because if I get this signal to go long, and then I see up here we're making some new highs, we've made a full deviation move, and then the market's starting to pull down, 2 or 3 bars here, I want to lock in and protect some of those profits. Okay, so as far as where I'm going to be exiting that spread, I'm going to be doing what my chart's telling me to do, first of all. Where are the stops at on my strategy or system? Okay, that's where I'm going to be getting out. That's where I'm going to be exiting no matter where I'm at on my delta, because I know if it just keeps on going against me, well, then it's just going to keep going down, right? So I need to lock in my profits where I can, where my strategy or system is telling me to exit or to trail or to get out or an opposing signal, okay? But with Nadex, you know, if I bought into this spread right here, okay, well, my P&L, my profit and loss is going to be determined by, okay, where did I buy? I bought it at 1532.9, okay? Well, where can I sell? 1532.5. So if I bought this spread and I'm watching the market go up and up and up and up and up, well, the value of this spread is going to go up as well. Meaning the price that someone else can buy it for is going up. The price they can sell it for is going up. So I know as I'm in that trade going up, I see my P&L going up. And I know that the value of my spread that I bought is based on, where I'm going to get out of it. Meaning if I bought it for this, for me to exit it early means I have to sell it. And the price is always listed right there of what I can sell it for. Right? So as the value of the spread goes up, both the bid and offer is going up. And I can always see as I'm going along, where can I get out of it right now? And like right now, I can get out of it, 3 ticks behind, right? Bid offer spread there. Okay? So I'll always know and be able to tell what price I can get out at. Okay? Before expiration. It'll always be listed there because if I bought it, the way for me to exit early is to sell it. And it's always listed right there what I could sell it for, okay? So as far as from a value standpoint, I'll always know right where I'm at and what my, profit or loss is, what I can get out of it for. As far as when I'm going to do that or why I would do it, it's all going to be about doing what the chart tells me to do, okay? I hope that helps your question there, Arnold. So, okay, guys, I hope that's helpful to lay a foundation of some things you might be looking for there as far as the market conditions and whether to go the route of a binary or the route of a spread. Sometimes one is a better option than the other for you based on that market. So, all right, guys, thank you so much for joining us today, and we look forward to seeing you on our next webinar here. Hop on over to nadex.com, check out the calendar for upcoming webinars. Everybody has a great trading week here. Thank you for taking time out of your Monday to join us. We will talk to you soon. Have a great one. All right, guys. Thank you. You're very welcome. All right. We'll see you next time.